Hello YouTube Stackers, this is ST with Silver Stacking 101, where we always believe in staying stacked and packed. Stacked with silver, gold, food, ammo, and packed with the means necessary to defend our stack. In the last video, I discussed the government is not going to seize our precious metals stock. They're not going to go door to door. There's so few of us that actually have it. The cost benefit of doing so is just not there. Instead, the government will seize bank accounts such as we've seen in other countries with bail-ins. They will nationalize retirement accounts such as we've seen in Argentina. That's a good reason to buy precious metals. But when we buy precious metals, we still need to hide our purchases, not only physically, and that's very important to do so physically, but also where it cannot be traced we have actually acquired precious metals and to what extent we have done so. There are three occurrences where our precious metals investments can be seized. The first is if we get in serious trouble with the Internal Revenue Service. Hopefully, that's not going to happen. The second issue is divorce, and we will talk about that in a few moments. And the third issue is lawsuits, and we'll also talk about that one. I'm not encouraging anybody to lie, or am I suborning perjury? However, I'm going to tell you what happens when a forensic accountant becomes involved with divorces or lawsuits. I have actually done this for a living. So I'm going to relay a personal experience and tell you how it works. When I mentioned don't buy online in the past, I have had several viewers say, I'll just say my silver was stolen. Okay, let's say a police report. Or I will say the silver was sold several years ago. Let's see the tax return with a Schedule D where you reported it to the Internal Revenue Service. Certainly you didn't commit tax fraud, did you? None of that works. Trust me. Here's what happens in a divorce or a lawsuit. When there are significant assets at stake, quite often one of the attorneys will bring in a forensic accountant, a guy like me, who works for the attorney. The attorney has subpoena power, and we basically do a financial proctology exam on the other party. How do we do this? We look for what is known as dangling threads. And when we find one, we give the thread a little tug and see what unravels. If you want to see how this actually operates, I am including a link to a video I did a few months back called Conspiracy Facts. Watch that. Watch it on one device and have another device open with Google and play along with me. It's great. You will see in a non-financial example how a dangling thread can lead one to something someone doesn't want seen. Let me tell you about a divorce case I worked a few years back, and I won't provide any identifying information. Husband and wife's going through a divorce. They had 3 children, been married a few years. Husband had an MBA, very financial savvy guy. He inherited the family business that was very successful, and he liked to invest. The wife noticed that the business had been declining. She asserted she was sure, but had no proof, that he was hiding assets. As a result, her attorney involved myself. When I became involved, I started looking at the profit and loss statements for the past several years, and I noticed the revenue had in fact started decreasing each year. The fixed expenses remained somewhat constant. We expect that. That's why we call them fixed expenses. But the variable expenses, direct labor, materials, and supplies, have been increasing each year that the revenue was decreasing. That was a red flag. It's not proof, but I started giving some credence to what the wife was saying. I went back to the time this trend began and started looking at individual line entries. In the middle of many entries, this is a business that is ongoing and has a lot of accounting entries. There was one entry for like $600 or $700 to a company that forms corporations. Now, when one forms a corporation, the entity doesn't exist until it's formed. So the payment of the formation is quite often paid by another party. On this guy's balance sheet, there was no corporation recognized, no new corporation during this time period. My gut reaction was somehow money's being diverted before it goes on the P&L of the business to this other corporation. We knew the company that formed the corporation. Attorney has subpoena power. Let's jump forward. The guy had formed a C Corp. When he formed the C Corp, he didn't take a salary, nor did he take dividends. He basically made it a holding company, and he was billing, invoicing under the new company so much percentage from his established business. It wasn't showing up anywhere, and I found it because of one dangling thread, that one line entry. That's how fast something can come apart. The guy thought he was slick. He wasn't. But let's talk about a lawsuit. Now, this is a situation that is going on right now. I'm not involved with. I know of this guy, met him a few times. He's not a friend, but he's about ready to lose a significant portion of his assets, and he personally did not do anything wrong, and it's a horrible story. He has a son, and this guy is a stellar father. I'm not criticizing his parenting ability. His son goes off to college, comes home after his freshman year, Dean's List student. The son seems responsible. Now, the father's worked all his life and has accumulated significant assets. The guy lives in a home that's paid for, worth over $1 million, according to property tax records. Son's home for summer break, gets with his buddies, goes, smokes a little weed, gets drunk in that one afternoon, decides to drive home. While he's driving home, he hits a mom on her way home from work to make dinner for her family and severely injures this lady. Sad story. Okay. Now, in the jurisdiction this happened in, liability follows the car. The car is registered, or was registered, to the father's name. So the father has the liability. When someone's injured in an accident, there are 3 types of damages. Most of the time there's only 2 they qualify for. The first is called special damages. This is medical bills, quite often, and lost wages. The second is called general damages. That's pain, suffering, and inconvenience. Now, if someone pulls up to a red light, going to make a right-hand turn, looks to make sure nobody's coming, doesn't see anybody coming, what goes to pull out and somebody was coming, that qualifies for the first two. That's simple negligence. Failure to exercise reasonable care of another. But if someone intentionally creates a situation, a willful disregard for the care of another, that's gross negligence, and opens the door to a third type of damages called punitive damages. Certainly, if someone smoked pot and got drunk before they drove home, they are guilty of gross negligence. That's the case here. Add to this, the victim, 2 weeks in neuro ICU, is going to have lifelong injuries and will never be able to work again. Very, very sad. She will have to have multiple surgeries just to get somewhat back to being able to function. In the state this happened in, the most liability insurance anybody can buy is $250,000 per person, maximum $500,000 per accident. If the guy had an umbrella policy, then you're talking about another $1 million. The medical bills alone has blown through any insurance this guy has. The lifetime loss of earning power has blown through any assets this guy's going to have, and the punitive damages. Trust me, with the level of assets this guy has, the plaintiff attorney won't blink an eye to spend $15,000 to get a guy like me to spend about 100 hours looking at this. We will find what's there in 100 hours. Of course, I personally cannot look at this because I know the guy and he's a acquaintance and that's conflict of interest. But somebody like myself will be looking hard at this and examining what went on. The way you can avoid ever having a detection that you bought silver is buy locally and buy with cash. And I'm going to throw another tip here. When someone uses their debit card, and the majority of people use cash very little now, they use their debit card, it paints a beautiful picture of how that person lives. Guys, unless it needs to be traced, like in my business, I used a debit card to buy gas to substantiate the mileage that I claim. I don't deduct gas, I do standard mileage, but I use the gas receipts to show I am driving this type of miles. When I buy something for the business, absolutely I used card because I do want a record. Everything else, I pay cash. It's a good idea to use the debit cards as sparingly as possible to maintain your privacy. But please, think before you buy precious metals. Are you creating a paper trail where it can be traced back to you? It's one thing for people to know that we buy precious metals. I put my face on YouTube. I say I buy precious metals. It's another thing to be able to substantiate how much. I never show my stack on YouTube, nor will I ever. I don't insinuate how much silver I have. Please conceal your purchases. Let me know what you think. Do you agree or disagree? Please tell me what you think and why you think it. Give me a thumbs up. Subscribe if you haven't. Thank you for watching, and remember, stay stacked and packed because we are going to need it.